Oh my goodness. Okay, I'm sorry about that, YouTube. I guess I was a little muted. The market, look at we're gonna go over the technicals, FOMC minutes to get a little gauge on what the Fed is looking at. Remember, what the Fed does is most important. There's three important reports here. There's the Fed, what they say, what they do, right? Their expectations. You have the employment report, you have the inflation report, which is a little far down the road, you have growth, and you have the market's actual reaction. So let's take a look at that. Now, first off, we'll look at these technicals here and let me know, make sure the visuals are good. All right, cool. Let me know if that sound is working there. S&P has been down for 3 days in a row. We filled this gap. This is SPX, okay? I know not everybody looks at SPX. S&P, XPX, I kind of like S&P a little better. Have a little more technicals drawn here, but you can see clearly, we'll go over the positioning in the market. We kind of double topped and we've been, 3 days down. We kind of filled this gap, right? We filled this gap after that first gap down and sold off. This is a nice little sell pattern, right? This might be the last correction in my view. If this corrects all the way back about 5% to the previous all-time high, I think there's going to be a lot of buying taking place at that area, right? But this FOMC is very important. So let's go over that first. I know that's why that was the actual thumbnail. So let's make sure we hit that. What up? Sounds great. Good. Thank you, Tigger. All right, let's go over those expectations, explain them, kind of see what's going on here. So these are the Fed minutes. Make it clear. Right. And again, Fed minutes are basically the are we having issues here again? I hope not. Ooh, looks like we are having a little bit of issues. That's unfortunate. Let me remove some of the stuff. I'll come back to Twitter. So the Fed is expecting a rate. Right now, the market is pricing in a cut basically in June, right? So everybody's pushing out March, but we do have some interesting dynamics here. Yeah, that's weird. Okay. Having some glitches here. Probably because I'm live too many places. I need a desktop. I need a desktop. This laptop. I got literally the best Apple, the M1 chip, but it still has issues when you stream everywhere. Let me try to get that reset. Hopefully it doesn't disappear because I had notes on there for us to go over. Let's see if I can see if I can pull it back up. Oh, that sucks. That's unfortunate. It's not like I can run a test run on this. All right, let me get rid of this and then see if I can pull it back up. I might have my whole computer messing up here. All right, well, here's what the FOMC minute said. I'll just, I went over it a little earlier. Basically, here, let's take this off. It's freezing on me. Basically, the Fed is talking about cutting earlier than expected. Okay, so cutting earlier than expected. Also, they mentioned the Fed balance sheet runoff or reducing the credit reduction. So right now they're reducing credit. What are you buying this correction? We'll see. I mean, it might be some Chainlink, it might be some Tesla. And during this correction, now, yeah, we'll go over all this. That really pisses me off. That really pisses me off, man, that we froze like that. Let's see if it's okay. There we go. Let's see if this window's working because I really wanted to go over those minutes. Ah, it froze on me, bro. Come on. Give me a second. I can't even open the quit page. God, you got to be kidding me. All right. Did it save? Did it say? Okay, there. It saved them. Okay, good, good, good. They're upside down. What is going on? The minutes are upside down. Okay, there we go. Yeah, that is some glitch right there. You got some real glitch. All right, let's go over these minutes. I'm sorry about that. Computer glitching. All right, FOMC minutes. TikTok, you guys probably don't even care to see them. I'll just go ahead and keep it on. I'll just keep it on the screen for YouTube and I'll read it from here. So FOMC minutes, here's what we got. And I just made all the highlights to the important stuff like China, inflation, rate cuts. Oh, there it goes upside down again. You see that? Just turned it upside down. Come on. That's crazy. See if it goes back. It literally turned it out. What's up with this? RRP. All right. We'll go with the stuff that's actually clear. Okay, so China. China slowing demand, global demand disinflationary. So they talked about China, that China is actually dragging demand down, which is more disinflationary. That's not inflation. Even though we see the supply chains you know, a little backed up because of the Red Sea conflict, because of the geopolitical issue, they're saying that China's slowing is actually contributing to more disinflation, right? And they did actually, no, I don't know what that is. They did actually start uh, creating more stimulus for Japan also. So China is increasing credit into their system. And remember, that doesn't go straight to the economy. That goes to support the capital, right? The capital markets first. So you are getting more credit into the system globally and a drag on in inflation to the downside. So that's good. And then we talked about the credit. Everybody's worried about this credit delinquency. But here's what the Fed said: the credit quality of business and households deteriorated slightly, but remained broadly solid as delinquency rates is in most sectors were relatively low. So delinquency rates in most sectors were actually low. Okay, when it comes to households and it comes to small businesses, and conventional mortgages, right? Those are not the issue here. What did it say? While delinquencies in credit cards, auto loans rose in the third quarter. So you do have auto loans. You have auto loans and credit cards up. Those are the two issues. So it's kind of balanced out, right? Not too bad, but not good. So there's probably going to be a slowing, right? And they're also citing on cutting earlier than expected, even though the page is upside down. Unfortunately, they are talking about cutting earlier than expected, which who knows what that means? March, June, who knows, right? Aggregate. Now the worst part of the actual credit delinquency risk was the commercial real estate, right? So households, businesses were not an issue. It was credit cards, auto loans, and commercial real estate. Those are your big ones. Now, hopefully, this is still upside down. That is crazy. I can't even read it. But they did talk about the RRP facility. So what they are saying is that as the reverse repo facility runs out of liquidity, they're more likely to slow the balance sheet runoff in by July, I believe. I marked it as July. As July. It's upside down here, but it is July. So what does that mean? That means that they're no longer in QT, right? QT is hiking rates. Well, they're at peak rates. They said, hey, we are very likely at the end of the hiking cycle. So no more hikes, even though we're hearing, oh, more hikes. And how does that? I just don't understand how that happens. We're at the peak of hike, and starting in July, so starting summertime, they're going to stop draining credit, right? Because they have all these assets that they're pulling out of the system. They're pulling cash out of the system. Now they're going to slow that down. So that's very positive. That's more stimulative. That this is the transition between QT to QE. And then let's see if I can read this upside down. Market conditions, SEP, they're more likely to cut delinquent. What is this? Wow, I can't believe this thing really turned upside down on me. That's crazy. That's crazy. It's just one section also. One section. I'm gonna see if I can get that back. Just made those notes. But yeah, we'll go to the correction also. Get rid of this. We'll go to the actual correction. Man, that really threw me off. Okay. Well, either way, we have NVIDIA earnings. And I think if NVIDIA does beat and we still get a market sell off, then we're going to have a correction. Right. And I thought we'd have one earlier, but we ripped down and came right back up. Now, when we do look at the SEP, or not the SEP, when we do look at the Fed minutes, one thing I always like to look at are the 10-year bond yields. Okay, so let's look at the 10-year really quick. How is it responding to that report where they are more likely to cut sooner than expected? They're going to cut the balance sheet or stop shaving off credit from the balance sheet starting in July, right? So that's really bullish, which means the market might correct into then. And there's a couple delinquencies, so they're definitely cautious on keeping rates high. They're very cautious. They're also saying, hey, inflation is coming to the downside. We're seeing more disinflation, and the geopolitical risks are limited. The geopolitical risks are a risk for sure when it comes to the supply chains. But If the aggregate demand is coming down from China, it's going to level out. So if supply does sort of slow down and demand slows down, you have no inflation. You still have falling inflation. So right now we have the dollar actually rise a little bit. Okay. Let's do the 30-minute, kind of see where we're at. We had that big spike earlier. I think it was last week. The dollar kind of got stuck at this point. I think I need to actually take this down so we can see a little better here. Or I'll just widen it on just gonna go ahead and widen this out. There we go. So we can see the whole thing. Because I have this highlighted so you know what we're looking at. 10-year government bond yield, right? So this is the bond yields. And yields, right? They haven't pressed past this level. And this came last week. What was it last week? February 13th. We had something. And if yields do break out, then that's going to tighten financial conditions. That's going to tighten the stock market. We're probably going to rotate down. But right now, yields are at the same point. Now, they didn't go up after the Fed minutes, so that's good, right? Yields are not pressing higher yet. They could start grinding up, but are they going to grind up because of NVIDIA earnings? I really doubt it. More so, you see the dollar move after NVIDIA earnings, because if there is people collecting profits going into dollars on a wide scale, because NVIDIA becomes the catalyst for the correction, then you should see the dollar go up. But the dollar doesn't necessarily drag yields higher or interest rates higher. But interest rates do drag the dollar higher, right? Now, when we go to the dollar, it's not really moving higher. So this is still pretty positive. Let's say NVIDIA beats and it grinds higher. Well, there is no correction yet. We're going to grind a little higher here. I really doubt it. I'm going to give it a 70% chance that we do see a correction. Maybe we come back into this VWAP section. This is anchored VWAP. This anchor is from that, not this low, because we already broke down beneath that, but the last corrective low, right? Every time you get a correction, I'm going to put a VWAP anchor there so I can see, okay, from that correction, where is the market moving versus volume, right? Relative to volume. And we have a lot of support. But, you can get that sell off just based off sentiment, over leverage in the market, over positioning in the market, because we've been over positioned for so long. Now you have SMCI kind of selling off, and the rally, the cyber securities are kind of pulling back a little bit. So I'm seeing personally, hey, the Fed minutes weren't that bad. They weren't very they're kind of neutral. They weren't too dovish. They weren't too hawkish. They did signal, hey, we have disinflationary forces and inflationary forces. But the bullish part of it, the dovish part, is looking forward. They're saying, hey, we're more likely to cut when it does come. Market is pricing in June cuts at the moment, and July is going to be the balance sheet turnoff. So QT turns, QT starts to soften and turn into QE after the summer. So second half rally, well, you would expect there to be a correction in between that. And we don't know. We don't know if there's going to be a correction, a major correction, something like 5%. Let's go to SPX. I think SPX gives us a little clear shot here. But we could just see this. We could just see us pull right back into this. And this anchored VWAP is from 2024. So this is the new year, right? From the beginning of the year, from January. We did have some support earlier. We kind of, we held above it a little bit before. So we could just pull into this area, which is 48.80, or drop even further. But after that report, it wasn't that hawkish. It wasn't that hawkish, right? The Fed didn't communicate that much more tightness. So we should be okay. Let's see if I can pull it up this time. Still upside down. That's insane. That is insane that this thing would actually be upside. That literally makes no sense. I had so many notes on there. See if I can read. Participants judge that policy rate was likely at its peak for the tightening cycle. So they did mention that they are at the peak of the policy cycle. Still positive for markets. I'm just going to read it, the stuff that I can see. Delinquency. Yeah, I think we're going to cut here. I think we're going to cut. And I think it just does come down to NVIDIA. A lot of people just waiting for those earnings to come out. If NVIDIA misses, NVIDIA drops. If NVIDIA beats, then we don't know. But I'm going to assign it more probability that we do correct, after NVIDIA earnings, which are in about 45 minutes. And we'll see how that plays out. Let's see what NVIDIA looks at the moment. See, what do we got here? Man, I'm sorry I couldn't pull up the FOMC. That really is annoying because you can't see I couldn't even explain the report as clearly as I wanted to. I couldn't remember everything I read. I took some notes on it. But here's NVIDIA. It's already pulling back. Here's the other scenario. NVIDIA might have already corrected, right? It might have already corrected. Could it fall further? Yes. But typically, if it's at 10% correction at the moment. Typically, if you get a run up into the actual FOMC minutes, we already had that. A run up into earnings, I'm gonna suggest, or I'm gonna, go with the probability that we sell off. Now it's already sold off into this into the report, which filled this gap down here, which it could signal, hey, like it's hard to tell. It's neutral. It could be signaling that we're ready to grind higher, that there is more buyers to come in, right? So we could just be getting a small correction as we've been seeing with the S&P and with the Qs. Here we go with the Qs. We've just had these small little corrections, right? Grind higher, correction, small pullback, small correction, small correction. So this could be the small correction. We just pull back into this area. It's not that big and we continue to go higher. But if we do correct back into the trend, if we do correct, like 5%, which would on the Qs take us to, let's see where the Qs would take us, 5% correction on the Qs. And 5% is just a guess. It's just an average. It takes us to about 417. We're at 440, or the highs were 440. So that takes us about 417, right? If we get to that level, then you do have the inflation report. And there's a lot of talk that this last inflation report that was a little hotter than expected, still falling lower, a little hotter than expected, is actually going to be lower in February, right? So February's report, which isn't due till March, we still have 3 weeks, which is why I think we do have a correction, because if we do correct, I'm looking between the 3 weeks before CPI comes out, we find the bottom, we grind back up. That'd be a great scenario, right? That would be very healthy for the market to get a correction. Corrections are always healthier because now the economy is very bullish, right? There's a sentiment in the economy is very bullish, and the economic indicators, the momentum indicators, payrolls, employment, all very strong. Yeah, we have some delinquencies, but I mean that's always the case at some point, right? That is always the case. The Fed is now turning the credit cycle, right? They've already mentioned they're going to turn the credit cycle back up, or at least stop draining credit from the system. So the stock market is going to grind before the economy actually recovers, as we saw in 2022, right? So correction, I think we go higher from here, but it would be good if we did have a healthy correction. Now, somebody asked, what was I looking at? Well, I still think a lot of these AI plays are playing out, and I am watching Tesla. I've been, pointing out, hey, Tesla had this reverse head and shoulders. Let me pull this back because I know you can't see it. We did have this reverse head and shoulders on Tesla. I'm going to take my face out of here so it's a little easier to see this chart. There we go. All right. So yeah, I'm looking at Tesla. It's still grinding down here. It's still the best EV, maker in the world, number one. But you do have the pattern, the reverse head and shoulders pattern that we are looking at. And I like this play. Palantir also sold off significantly after a great, earnings report. They beat on commercial. They have the commercial contract starting to pick up now. So I do like Palantir also if it pulls back enough. But you do have the reverse head and shoulders. And I was sending out some charts on Twitter. It did break out of this trend, pulled back. This is still on trend, right? We're still in the uptrend, pulled back a little bit, and I think we're in good shape here. Now, looking at the RSI, it's still starting to climb. So buying pressure is barely picking up for Tesla, one of the Mag 7s who's been left behind. I think it does have a catch-up trade because we are looking at lower rates going forward. If inflation does come back, we won't see that till maybe 3 weeks or March. Right now, the expectation is that inflation still falls a little further. What's new with Cooler? Ooh, that's a really good question. Cooler is announced that they will actually be serving Blue Origin and SpaceX with their batteries. So they did pop a little bit. Now, this is a micro cap, super, very risky play, but when these things move, they do move a little bit, right? So we did have a big move. This is a big 40% move, came right back down. Now, Cooler is a micro cap who is in battery technology, and they're using Cooler's testing to test the new electrification of the economy, right? where if you're starting to put batteries at renewable energy or a battery storage in these different, whether it's electric vehicles or any type of battery for NASA uses them, or who else would it be? Military, right? Whoever it is, they have contracts with the military, with NASA. When they have to do testing, so they're supposed to be the standard for testing. And the stock was tanking because, I mean, they needed to get their market cap above a certain level. So this is very risky play here. But I put in a very small amount, and when it does move, it moves. And it's extremely oversold. I mean, it's at what, 17 cents, 15 cents at the moment. So it's just a long-term play for, energy storage. I think the biggest narratives here going forward are still going to be with AI, and, Palantir is the most pure play AI that I see, and it is showing some retracement. So if you do get this correction in the market, this is where you start scooping up, or what I'd start scooping up, a couple shares or plays on the best narratives, the best themes in the market. So Palantir pure play on AI, it is pulling back a little bit. Cooler is not the best play, but it is a tricky, it is a fundamental risky play. But the fundamentals are basically, hey, we need to add more contracts. We need more usage we need to get more clients and more usage. So I'm interested in that. Also, Tesla's down a lot. And then obviously you guys know Chainlink, right? But I am I'm looking at Tesla because I'm so used to the trading here. So I like what I see here, especially if I go to that 30-minute chart. Okay, 30-minute chart, we're grinding higher. Let's pull this up. We're still on trend, right? We're still on this trend. You're holding the anchored VWAP from the lows. Here's your anchored VWAP, which is volume weighted average from the lowest low that we've seen in the last month. So we got below it a little bit, started to bounce, and we held it. I think yesterday, was it yesterday that we held it? Yeah, we bounced yesterday or a couple days ago. I can't tell on this chart, but we did bounce here. So if we do come down during this correction, I'm gonna see if we can hold 190, right? If we can hold 190, still very interested, because I think Tesla is the most shorted stock in the market as far as market cap. And when it does start to squeeze, I think it squeezes up to 240 initially. 240, well, first around 215, and then somewhere around 240. I think we can come back up here. So I do like this play when it comes to the mega caps. Not all the mega caps are in the best. Why Pan W sold off so much? I believe that cybersecurity, right? Palo Alto Networks. Wow, they got crushed. I didn't see that. I actually did not see Palo Alto get crushed. Let's see. I'm not sure. It could be a buying opportunity, though. I don't know much about them, so I don't really mess with Palo Alto. So I'm not gonna really dip into this, but that's a pretty big move there, 27%. It could be idiosyncratic. Cybersecurity is still high demand. Zscaler is another one. Let's see where they're at. Zscaler. So maybe this was a market-wide event. Let's check the cybersecurity stocks that I have on here. Cybersecurity, where we at? Or maybe would I have it on data chips? Here we go. CrowdStrike also. So this is a market-wide event because CrowdStrike also pulled back. And this is why I also think, hey, we could be in a correction period. A lot of these stocks are up, 60, 70, 80%. Now you're starting to see the chips pull back. Okay, the chips are starting to pull back. Had earnings yesterday. Yeah, they had earnings yesterday. But everyone's pulling back, right? The chips are pulling back. Let's just go through them. Palantir pulled back. CrowdStrike, Zscaler, and other cybersecurity. This had the biggest move, Palo Alto. Okta, I guess, didn't move that much. Oracle's not so much cybersecurity, big data, not so much Adobe, but you're seeing this correction in the market so far. And Twilio really got crushed. Wow, 55. And you just want to see, hey, are we going to stabilize here? Well, is the dollar going to stabilize where it's at, not move any higher? Are rates going to stabilize where they're at and not move any higher? The bond market. If that's the case, I think these all turn into buying opportunities in my view. If not, if they continue higher, I think the correction continues to deepen, right? And that's where you get a better opportunity, because ultimately we are staring at a huge bull market. I think we're looking at a big bull market. AI is making productivity go up, and that means more for less. That means you're more efficient in these companies. There's going to be you have to choose your winners here. CRM, Shopify. I'm just taking a look. I haven't seen these IBM. So you definitely have to choose your winners. But who is stronger than a lot of these companies? Tesla. Tesla's been grinding up because it sold off so much. Here's the anchor VWAP from that spot. So I do like Tesla. I think we're going to get a small turnaround here because the energy storage business, but mostly it's technical. Mostly people are piled in too much to the downside. They once the shorts get squeezed, if they cannot push it lower from what are we at 185? If they can't push it below 185, they're going to get squeezed eventually. So that's what I'm staring at there. See if I can open this again. I'm really disappointed that Apple's features. Is it just this page? Let's see if I can move it upside down. Oh, I guess not. I guess not. And then here's a look here. We'll take a look at the actual. Let's take a look at the actual with the how the Fed is pricing the stuff in. Oh, I did take it off. Okay. Just to give you a visual. Let's see if Twitter opens. Am I gonna have to get a desktop? Sheesh, this is ridiculous. Yeah, so here's a look at just so you can see visually the reason why the market is still going to be in bullish territory in my view after the pullback. Corrections are very healthy, right? Don't get too worried about a correction. If you try to catch it, you want to catch it at the top. It's really hard to short, especially in a bull market. It's very hard to short. I know there's a lot of fear mongering all over the internet still. A lot of fear mongering. And that's unfortunate. But here we have this is what I want to show you, the Fed projection. So here's a visual where you can see the actual cut. Obviously, we've been at pause for a while. We've been pause, pause, pause. The market is pricing in the first cut to come in June, right? And again, June and then July is the Fed balance sheet or positive credit, right? It's not really an increase in credit, but it's less to the downside. If somebody's if you're paying more and more tax each month, they're shaving off more off your earnings, and all of a sudden they shave off left, you have more in your pocket. They shave off less, my bad. You have more in your pocket. So we're gonna get the cut. We're not gonna get the cut, but the market is projecting June. Now the minute said sooner than expected, and I can't show you because my thing froze. I can open up the minute somewhere else, but it froze on me. But either way, the market, if it does sell off, we're looking at easing conditions going into the summertime. So what is it, March? And we've been saying on here, we probably get a correction late February, early March. I don't know if it's going to be today. We'll see when NVIDIA earnings come out because there's not much else you can look at. Other than that, it would be a blessing to actually get a correction because now you have a lot more upside. Now you're positioned a lot lower. So, stock picking, we can go through. What are some stocks you can look at? I still think crypto by far is your best opportunity. I would say so, looking at it for myself. Also, let's see where the VIX is at. The VIX is trying to make a move to the upside. The more that thing goes up, you're gonna get a nice opportunity. So I'm still guessing late February, early March, could be this week, could be today. We start the continuation of the correction. As long as we don't have oil spike, inflation is going to be under control. Also, the Saudis are still controlling the oil market, right? And if that's the case, if the Saudis still have control of the oil market, they can always flood the market. If they do flood the market, those prices come right back down. The sweet spot, from what I heard from Paul Sankey, who is an expert on oil, he says $80 is about the sweet spot where the demand and supply is coming into balance, and where Chevron, Exxon, they're making a lot more money. So if you do want to go long energy, it wouldn't be really oil. It would be more so because they're giving out dividends. It would be Exxon. It would be Chevron. Who else is there? There's a lot of, I can't think of all the oil companies. I should have a list of them. I don't really look at them, but that would be it if you had an inflationary trend come back. It's not coming from nat gas. Nat gas is getting destroyed, right? So much supply of nat gas. I had a little pop today, but there's no inflationary pressures. Copper is moving sideways, right? And then we just got China, right? If China's the largest economy outside the US and their demand is still low, projections are still low, you're not going to get a commodity boom, and commodities are going to give you the signal that prices come back up. Because if commodity prices go up, the input prices for everybody else goes up, and now they're going to push those onto the consumer. You get consumer price index go up. But that's not the case right now. We're not seeing that. And if production comes online, if we do have better technology, better production, even if demand goes up, even if prices demand does go up, we can create more supply, which keeps prices in line. So it's all about the supply production side right now. And then also the commodities index. This is the future commodity index. It's still falling. Nothing to worry there, right? Nothing to worry about on there. Now, what we do want to see is bonds finally catch a bid here. And I think we do get that if those commercial real estate loans and the credit, default swaps, whatever, not default swaps, but what is it? Auto loans. I'm sorry, auto loans, delinquency, credit card delinquencies. If those start to come into play, then bonds will bid back up, right? Bonds will find their bottom eventually, especially with the Fed cutting. I don't think this lasts for long. And when bonds go up, the stock market goes up with bonds. That has been the cycle right now. This has been the cycle for the last 2 years. Bonds and stocks have been moving together. That is not historically true, but it is true today, right? Which is why you can't always look back at history and say, well, this is how it works. Well, it did change on us the last 2 years because of inflation, because we had inflation roll up, but we're in disinflation. So, anyways, you need a bid in bonds to get those, rates back down, okay, and to get rates back down so the market can catch more tailwinds. But you really don't even need that. The market's had good earnings, and I think we front ran earnings, right? I think we took a run ahead of earnings before earnings finished completely. And I always said, hey, NVIDIA is going to be the last shoe to drop, and we're selling off. But the thing is, we didn't get totally vertical into NVIDIA earnings. So now it's like, well, maybe we do bounce here. Maybe it's not a complete correction. I still think it's more likely we come back down. I just don't know where we settle. Right, the bottom should be that all-time high, which is what, 482? Is that our all-time high? About 482? Yeah, I think that's where I marked it. 482 should be about the all-time. That's a big drop from here. That's a big drop from here. So we'll see again right after NVIDIA. If people want to offload their stock, SMCI kind of blew up. So I think that's what we're looking at. Nat gas bounced on energy firm saying they're cutting nat gas drilling down. Okay, yeah, that's what we heard too. It still has a long way to go, right? Where does it actually become an inflationary problem there? But okay, so it finally bounced off that. We'll see if that bounce continues. What happens if RRP is drained? Okay, good question. We just talked about that. So RRP is here on the top. Let me bring these down. The reverse repo facility is what I call shadow liquidity because nobody saw it coming. It was in the shadow, right? This was the actual credit coming into the system. This drain is, in a sense, money leaving the Fed, going into the capital markets. And that was our shadow liquidity that nobody saw coming. We thought, oh, this is a recession. The yield curve is inverted. Well, none of that mattered because this was new. We've never seen the reverse repo facility gain $2.5 trillion and then all of a sudden start dumping back into not the economy, but into the capital markets, into the banks. What are they doing? They're buying up treasury rates. That's why rates haven't surged. Everybody thought, oh, treasuries were going to be going up again like they did in the 70s. Never happened because all this money ate up the treasuries, which provided money for government spending and also kept rates capped, right? Now, when it runs out, that is the issue. What if it runs out? Okay, well, the Fed just announced if it does run out, and this is where, let's pull this up here because this is what we're looking at. Well, this is the Fed balance sheet, right? This is draining money out of the system as it goes down, and this is pushing money into the system as it goes down. Once this goes to zero, they're saying this should happen by July. This is the Fed minutes anyway. They're saying that the Fed balance sheet will start to level out. So we should see this no longer drain. And remember, the Fed balance sheet is credit into the system. You can see during the pandemic, during 2020 through 2021, we had a lot of credit come into the system. When you get more credit, you get the devaluation of currency, asset prices go higher. You get asset inflation first. And then when we got real inflation to the economy, they started pulling that money out, saying, okay, we need to reduce the money supply. And they've been doing that. But now they're saying, hey, we're going to slow down on reducing the money supply. And that's actually positive for markets. That is the signal of a switch from QT to QE. So once we get down there, they're going to start easing. Look, we've been really easing the whole time. We've been easing the entire time. And the reason we don't have crazy inflation is because you have supply chains that are stronger than expected. The supply chains are back. We're building that in the US at the moment. A lot of manufacturing going on. I probably missed a lot of comments on TikTok. I haven't looked over here. Let's see. Just doing more updates. Okay. I don't see anything. Let's see what else you got. Nat gas is at COVID lows. $2 to $4 is normal. Okay. Is it? Is that normal? $2 to $4? I don't know what that is on here because I'm looking at nat gas futures. Um, I'm looking at nat gas futures, same thing, just priced a little differently. But there's more. This is the cost of energy, by the way. More and more supply of nat gas is just coming into the market. So no inflationary pressures. So they're cutting rates. So they're cutting rates then. I don't know. I mean, they don't tell us exactly what's going to happen, but my guess is they're going to cut between March, April, and May. Again, you know what? Let me pull this up. Let me see if I could pull this up. See if I could just pull up the original paper here and find it, and then I can show you what they said. You said this chart is skewed a little bit. This is the nat gas futures chart, if that's what you're asking. Henry Hub nat gas. I'm not going to look at it right now. I mean, I'm sure the correlation is pretty much the same, just different prices, right? Okay, so on here, I'm going to have to re-download it. See if it lets me re-download it. Get rid of this one that broke. I can't believe that thing broke. All right, here's the new one. Here is the new one, and then here's how usually we do it. Let's see. I'll put it over here. All right, so this is the actual Fed minutes. I just had to re-download it. I made so many notes to it. Let's get rid of the old one. Where's the old one at? I don't want the old one. Here we go. So this is the Fed minutes that just came out today. And if we look at, all you got to do is type, if you download the document, you just type in rate cut. Actually, you know what? Let's just type in cut. And then we'll actually get the cut, what they say about cuts. Scroll down a little bit. This is it, right? I wonder if it's still glitching on me. That's weird. Cut. Why is it doing that? Should be pages where it pops up. Cut. No. All right, I probably just missed it. All right, so here we go. And I'm going to highlight this again. Is this the highlighter? No, that's fine. The manager let me see. The manager turned next expectations for monetary policy. Market participants broadly viewed recent inflation data and the December summary of economic, the SEP, as increasing the odds that rate cuts might start sooner than previously thought. So this was before. Okay, this was obviously mostly for January. The modal path of federal funds rate from the open market desk survey, primary dealers and surveys, blah, 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 participants was little change from December, but showed an increased likelihood of earlier rate cuts. Okay. Implied by option prices decline, blah, blah, blah. Okay. When we already looked at that, it says the whole implied of rate cuts is June. Right now is what we're looking at, June. Modal paths were closer to the December medium SEP, blah, 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 which had declined more substantially over the period. The further based on the flex, blah, blah, blah. Okay. So the futures based path likely reflected the effect of investors' perceived probability of more substantial rate cuts rather than their baseline expectations. So they're just pointing out here that the market is still pricing in earlier cuts, but that was back when they were looking at March. Now we're looking at June. You said those futures are wrong. Oh, okay. I see what you're saying. I mean, uh, the prices might just be different. I don't know exactly what you're pointing at, but the prices are just different. Maybe it's just like a different exchange. How about balance sheet? What was that? Okay. Communications over the period heightened market tensions around the potential slowing of balance sheet runoff. Most desk surveys responded expected a slowing. So here's the slowing of the balance sheet. Most desk survey respondents expected a slowing of the pace of start or pace to start by July, although there were more considerable uncertainties about the exact start date. So there's no exact start date of the balance sheet runoff. They are speaking about it, they are talking about it, but it looks like somewhere between March, April, May, June, July, which is, I guess, kind of a long time period where they're going to start easing the balance sheet and rate and implement rate cuts, right? But the key here is that inflation has to slow down. The key here is that inflation has to slow down. What do they say about inflation? See, throw in inflation there. There wasn't a whole lot. I know this thing is glitching now, unless I can't spell. This has to be a glitch. There's nothing about inflation. Sheesh. Okay, there we go. While expected inflation was little changed, price of inflation derivatives continue to suggest near-term path of inflation consistent with 2%. Okay, that's not nothing too crazy. Consumer price inflation continue to slow. You know what? They also mentioned, I had it in my other highlights. I don't want to take too long to find it. That consumption, they're actually projecting that consumption does slow in February. So my guess is again, we actually have a really good February report, right? It's going to happen in March, but we have a good February report. So I'm kind of hoping for a correction here because that's gonna, I think it's only up from there. I think it's only up from there, and the correction is going to be because something's wrong with the system. In my view, it's going to be because people are over positioned, right? Very over positioned. SMCI, all those other things. I'm going to get rid of this. This thing is glitching, but you can always find it somewhere. Just look at minutes, Federal Open Market Committee, and there'll probably be adjustments. Anyways, the most important part of that is how did the dollar and interest rates actually respond to that? Okay. And then Bukowski, what are you talking about here? Those futures are wrong. And that gas, okay. I mean, maybe I don't know, man. This is Trading Views data, so it is what it is. It's Trading Views data. Um, Maybe they're just different. I'm pretty sure all nat gas looks the same though, right? Let's see. This is spot nat gas. It's probably what you're talking about. Here's spot. Maybe I'll just use spot from now. To me, it's irrelevant because I'm not really trading nat gas anyway. I'm just looking at the futures. 185 got down to what 150. Oh, I see what you're talking about now. Historically down here. So this is why everybody's trying to buy nat gas, huh? Okay, the nat gas trade. That's why you're upset. That's why you're so intense because this is a risk trade here. So yeah, it looks like nat gas bottom, what was this, 2020? Around this area, 150. So maybe this is where people start going long. Spot is fine. Okay. I see though. Okay, so if that's the case, then yeah, that looks like a pretty nice trade. Again, I don't know if I trust it because again, global demand coming back down. What could get nat gas back up as far as demand supply dynamics? Maybe you have less supply, which they just started, right? We're no longer going to supply or produce as much. And then where does the demand actually pick up? I guess is the question. But I'm not a commodities trader, so I don't have the answers to that. I'm sorry. All right, innovative concepts. My bad, bro. What up? I get so many pop-ups on the TikTok live. It just shows people join. It shows me that people are joining. So I can't even see if somebody's actually commenting. That's very annoying. You said the report is going to be tomorrow? And we're getting close to NVIDIA earnings anyway, so I guess we'll just listen into it. We'll listen into it. What is Tesla looking at the moment? Oh, it looks like we're climbing back up. Market climb back up a little bit, squeezing those people who try to short. This is wild. My only explanation would be looking at, is TLT catching a bid here? Yep. So if TLT is catching a bid, then rates are going to ease a little bit, even though that's not much of a big move. I think this is all positioning. And then where's the dollar at? Dollar still falling. Okay. This is good news. This is good news. But again, it could all switch on the earnings from NVIDIA. So who knows? Who knows how long this actually lasts? Let's go to Twitter. Projected rate cuts. Okay, so this is the EIA report. All right. Yeah, I don't really pay too much attention to that. I'm usually just looking at the actual price because I can't gauge supply and demand, when it comes to the actual commodity as much as the price. The report, I'd have to figure out how to read the report. There's so many reports when it comes to energy. There's a lot of energy reports. So let's go over some tickers then. Let's hit some tickers. All right, what did you say? I stay on the DX. Oh, you stay on DXY chart. Okay. Yeah, the dollar's key here, man. The dollar is actually key. I think the dollar is key for risk assets in general. Now, Chainlink is pulling back a little bit with Ethereum running up a lot. I think this has the best fundamentals by far. They're not like any other crypto. Oh, it ran up so much. It's just getting started because there's a real use case here. Fundamentally, there's a real use case. Citibank just talked about tokenizing their assets. They're all using CCIP in order to move those, on-chain assets from one bank to another. They're going to be using a global protocol to actually move that and to, actually move treasuries, anything that is any kind of asset that's actually being moved. DTCC is the settlement layer for the US, basically the settlement and exchange committee, right? Which is kind of like, hey, we got to make sure these are legal, and they're using CCIP too. So I just don't think anybody's competing with Chainlink. It's really hard. It's hard. It's not like, it's not the sexiest narrative, but it will be. The tokenization of all assets is coming. So that's the narrative there. But let's look at some of these big data, Oracle, Okta. So who pulled back the most? I don't know. Datadog, Meta. Everything comes off the price of the dollar. Yeah, that is true. Everything is priced in dollars. The dollar is about 75 to 80% of global transactions. And that's why it's so important, because it's the denominator. It is the denominator to pretty much everything. So if your denominator moves up, I'm thinking of a actual way for the course. I'm trying to figure out a way to explain this very simply, but when your denominator moves up, it makes the number on top, whatever it's priced in, go down, right? Not like one for one, but typically if your denominator gets bigger, the numerator falls in value. But if the denominator falls, if we go into QE, which is why I think the dollar is going to roll over here, they're going to slow down the pace. If they slow down the pace, right now they're dropping treasuries, they're removing cash from the system, which makes the dollar go up. If they slow down the cash removal, okay, if they slow down the cash removal, so they stop pulling dollars out, then the dollar is going to weaken automatically. It doesn't mean it goes, to the lows, but it's going to put a weakening force on the US dollar. Once they actually do they cut interest rates, they're cutting the value you get from collecting dollars. because right now you can yield what 5% at the money market funds. Well, when they cut that rate, you're not going to get 5% at money market funds anymore. Maybe 5%. I'm just kind of giving the numbers. I'm just kind of throwing out numbers here. If they cut rates by, let's say 1 whole point, will take away 1 whole point off the interest earned on your dollar, so the dollar falls. So I just think we're at the end of the dollar, at least for this cycle. I think the dollar has peaked at this cycle, unless you get a real geopolitical risk. If war does escalate, the dollar is a safe haven. It'll spike regardless. It'll spike because it is the safe haven. Everybody wants dollars across seas, whatever it is. But if it rolls over because of easing, that's going to push up risk assets. Crypto will, in my view, outperform everything. There'll be a couple tech stops. Maybe NVIDIA, maybe SMCI comes back. I don't know. I don't know how legit SMCI actually is. We'll see on their earnings. If they did they already have earnings? I'm not sure. But that would have been a nice short on SMCI in general. So the dollar, the dollar is key. And I'm looking at this anchored VWAP for SMCI to see if it can retest 800 and get short again. But yeah, that was a big blow off top for SMCI. Who are the other chips? There's a couple chips out here, a couple chip stocks. Okay, so here's NVIDIA's chart. Man, that is really healthy though. I thought NVIDIA was gonna keep running up. How do you define a cycle? That's a really good question, Tigger Media. How do you define a cycle? Jammy did 35%. Jasmine, everything comes off the dollar, 35%. Not sure what you're talking about. Innovative concepts, Jasmine. But how do you define a cycle? That's a really good question. There's a lot of ways to look at it. To put it the most simple way, I would say a cycle is you're looking at the economy, right? The economy, I like to use the ISM. You've heard me before, the ISM. And the ISM is, see if I have it up here. I guess it's not really viewable. You guys see me put it up all the time. The ISM is basically the manufacturing index, because services don't really define the economic cycle as much. They contribute, but they don't take very long to make. Like if you cut somebody's hair, that takes 10 minutes, 30 minutes, an hour, versus to create a good or an industrial product is going to take months, weeks at a time. So that's a little slower. Also, those are more expensive. So I always use the manufacturing cycle, new orders, and it is from peak to trough and from trough to peak. That's how I define the cycle. Kramer said NVIDIA is nowhere near its top. So everyone said, so everybody sold. Hey, that might be true, dude. The fact that we sold off this much, we might not be at the top. But anyways, yeah, going to the economic cycle, I like to look at the ISM new orders, which is a little more complicated, but that's the business cycle for me. New orders minus inventories is even closer. That's the cycle momentum. And then you want to look at the employment, right? Two things, payrolls and unemployment. Well, unemployment's still low. So you could say unemployment is at the end of the cycle, but not necessarily. That's not necessarily true, because payrolls have been decelerating. So payrolls, I'd argue, are actually barely starting to pick up again. Now, this is all economic data that you'd have to see for yourself. I could put it up here, but I don't have the slides ready. So I look at, where's forward-looking growth, where's employment, and then those are the economic factors. And then when it comes to the Fed, you're looking at where are rates headed and where's the credit headed, right? So the credit cycle, you got the interest rate cycle, you have the economic cycle, you have the employment cycle. So there's no one thing to define the cycle, but when you put them all together, I see manufacturing starting to turn positive. We probably got 18 more months of upside. I see the payrolls data, I think, is more mid. It's not really early cycle. It's more so, it really kind of is just staying at its level. And then when we look at, rates, that's the easiest thing to look at, interest rates. I mean, the interest rate cycle is really easy to look at. I think I have it right here. Let's pull this up. Fed liquidity. Well, let's look at Fed net liquidity, right? This is credit. This is mostly credit. This isn't really interest rates. I think I have interest rates on here too. They're not showing up. Okay, whatever. Let's add Fed funds. Fed funds rate. All right. So here was the Fed funds rate, the top of the cycle. Once they started hiking, right? This was the interest rate cycle. Now they peaked. So we're at the peak cycle for interest rates. there's only down from here, right? Sideways or down from here. So this is the beginning of easing. This is the beginning of the monetary cycle or the money cycle, the easy way to put it. And then you have liquidity at the bottom hand, right? Let's look at liquidity. And liquidity is mostly credit into the system, right? Big impulse of credit during the pandemic. And then as inflation rose, credit drained. Now we've been actually, the credit cycle started, I would say, October. Was this October? When was this? Okay, January 2023 when stocks exploded. So the credit cycle started to pick back up. So the credit cycle is barely starting to rip up again. And if you go back in time, credit only moves higher. It can taper like this. What was this? This was 2006, 2007, but there's no way we have to put more credit into the system in order to pay for all the debt, right? So this will just keep picking back up. It always goes higher. So credit cycle, interest rate cycle, economic cycle, employment cycle, and then you have the speculation cycle. We're at all-time highs. We just got started. So I mean, Nvidia is probably the best proxy for the actual speculation cycle, right? It started way back when. The chips started way back when here, but everybody missed Nvidia, right? Not most people actually had Nvidia. Most people, and they're waiting for pullbacks. So everybody thought Nvidia would crawl back down. It never happened. There's way too much demand, but eventually there'll be so many chips for the chip sector because everybody's, because chips are so expensive, they're going to create an excess supply. I don't know when that is. And when that supply gets to a certain point, prices will have to sell off again. And then Nvidia still has a good business model, but the chips in general are not going to be on fire. It's going to rotate into something else, whether it's crypto, blockchain, energy storage, or some other area of artificial intelligence. It could be robotics. We could see a robotic cycle, right? For the labor shortage, immigration is a lot of very arguable, and then you have the demographics. So there's a lot of cycles here. Okay, I missed you guys again. How long you been trading for? I've been trading for, I haven't been heavily trading the last year, like heavy, because I've been, working on creating content, creating courses, trying to create a course for understanding macroeconomics because, hey, you lose if you don't understand everything. And, but I've been trading for since 2019, since about 2019. Best trades were Tesla, so I'm kind of stuck on it. Tesla, Bitcoin, Ethereum. Those are my best trades as far as if you're talking like position trades, right? Longer term trades. Look at my best skill is honestly noticing something and holding out for it a long time. I do swing trades too in Tesla. I'm not a big day trader. Will I day trade? Yes, but I have a bigger edge on understanding the themes that are happening in the market. And when something is underbought, I don't even use fundamentals like that, really. I mean, of course, you want a solid balance sheet, you want solid fundamentals, but I don't think you need to go look at the PE. The PE is irrelevant, man. That is irrelevant. The price to earnings is only relevant for S&P, and it's relevant when, I'll put it this way, price to earnings is relevant when positioning is very, very high or very, very low. So when everybody owns a stock and your PE is high, that's a warning sign. But if the PE is high and nobody owns it and it's the future, as in fiscal policy is feeding into it, it really doesn't matter. It's irrelevant, right? It's irrelevant. It's going to go higher, which is Apple, Amazon, Google, Facebook, and Nvidia. They all went higher with higher PEs. So I always have, there's always caveats to everything. There's always a trade-off. And I think the most important fundamentals are you dominating your space? Are you the monopoly? Is this stock or the name or the asset the monopoly? Is it where most growth is headed? Does it have some type of innovation? Does it have an edge or a moat versus the others, right? I think that's more important than just the PE ratio, unless you're looking at value stocks, but I mean, those don't grow fast enough. Um, so that's how I put it when it comes to PE. And we do have NVIDIA. Actually, you know what? We do have NVIDIA earnings come. I think they're about to show them. Let's go ahead and jump on CNBC. I guess we're going to just jump in NVIDIA. We'll just go ahead and jump into NVIDIA earnings, the big earnings report. This might tank the market. All right, let's look at NVIDIA. I'm going to throw this chart on here. Oh, wow. The S&P is launching. Did I miss the earnings? Did they already come out? Shoot, I better hurry up. We got what, 1 minute left? Okay, let me throw it on. Let me throw it on the screen. Let's see if I could just do a pop out here. See if I could do a.
It is almost game on for NVIDIA. I'll see you tomorrow. Can't wait to see what happens in a few minutes in overtime with Morgan and John.
All right, we got NVIDIA here in the right corner.
We got a comeback for the major indices. The Dow and the S&P ending in the green near the highs. The NASDAQ still a bit negative. Well, that's the scorecard on Wall Street. But now, winners stay late for NVIDIA earnings. And today we're coming to you live from our new studio here at CNBC's global headquarters. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
We have a very big show for you today. In less than 20 minutes, we will get those NVIDIA numbers, and we have a team of experts ready to help you figure out what they mean for the stock, the tech sector, and...
Okay, cool. So yeah, NVIDIA earnings, 19 minutes. Is that for the earnings call or for the actual numbers? We'll know because we'll see the stock start moving beforehand. Awaiting NVIDIA. But anyways, yeah, if you guys are listening on YouTube, I'm gonna keep it on pause for a little bit and then just kind of talk this through. But yeah, I think we're in early cycle. I think best case scenario is we do pull back to all-time highs to give some room for people to buy because the economy is very strong. It is reaccelerating underneath the hood. As I always say, it is reaccelerating. The credit cycle is about to turn positive. That's very positive for asset classes. And you know what you'll hear? Oh, if the Fed cuts rates, if credit comes into the system, inflation comes back. That is not actually true. Let me explain. The reason it's not true is because when you do increase credit back into the system, that goes to the banks. So if you have a weakened economy and there's a lot of credit defaults, all it does is bolster the economy, or I don't even want to say the economy. It bolsters, commercial real estate delinquencies. It bolsters the banks where that debt is actually dead, where it's no longer. Oh, I guess I can't say that on here. Where that debt is no longer alive, right? So credit, the only way it becomes inflationary is if it is lent out. If you lend out all the credit that comes into the banks from the Fed, that's where it becomes more inflationary. But credit standards are pretty tight at the moment. And banks are pretty smart about who they're going to lend to. They're not going to, this is not 2008 financial crisis. And when you do cut rates, that could be more inflationary for sure than actual credit. But the economy is still, weak in certain areas. The housing market is still slowing down. And in order, there's actually an argument here to get housing prices to slow further. We know rents are slowing. You might actually have to cut rates because then I guess the home builders to start, if they cut rates, they're going to start building houses because they know the demand's going to come back. So if they build more housing, then there's more supply and that puts downward pressure on prices. But if the demand is too strong, it really doesn't matter. It'll just stay the same. No, let's keep that like that. But yeah, so we're at the beginning of the credit cycle. Also, the momentum indicators for the economy, ISM, new orders minus inventories, that is also moving positive, which signals margin expansion or profit expansion, right? So if you're making 10% profit off of your business, now you're going to start getting 13, 14, 15% profit. So investors love profit margins rising, and profit margins are set to rise according to how the the new orders or the new demand, forward-looking demand looks in the economy. It is actually picking up. The biggest risk, I think, is always inflation reaccelerating, but not from the demand side because we have strong production. It's from a loss of production, a loss of supply. The supply chains get backed up again. There's another conflict in another sea. Maybe it's the Mediterranean Sea. Who knows? If there's any other kind of conflict that backs, oh, there's NVIDIA starting to pump. Looks like it's starting to pump. Okay. Yeah, if there's another conflict, then you basically can't get that supply forward into the economies, and then prices start to go up. So that would be the biggest risk here. Or oil just spikes. So if oil prices do spike, which I don't think is going to happen either, and this is a probability, it could always happen, but I don't think it happens because Saudi is probably doing a deal with the US where, hey, if oil gets above a certain level, we'll give you this, and you guys just increase your production, take your market share back like they did in 2015. They flooded the market with oil in 2015, and the price dropped considerably. Huge drop in price. Just look at Paul Sankey. All right, come on, NVIDIA, where you at? Starting to pick up a little bit. And so far, on other news, rates did not make a new high, so that's also very bullish. Rates did not make a new high. 10-year yields, or the cost of money borrowing out 10 years is finding resistance at 4.3% basically. And if you get sideways rates, that's pretty bullish. It's not like extremely bullish, but it just means the market can still move higher as long as it knows where the range is. The range is like 4 to 4.3. So we can still move higher off that range. Dollar also not really strengthening either. So the macro forces are strong. No inflationary. Fed minutes pretty dovish. Expecting a slowdown. Still waiting those NVIDIA results. See what they're saying.
Talk with not only all of NVIDIA's competitors, but all of their major customers. And they want choice. They do not see that it being a healthy market, with estimates of NVIDIA having 95% market share in at least the Western data centers, and they want more. But with that said, AMD and Intel can't show up with something that isn't competitive. And on the AMD side, they've absolutely shown up with a competitive part for LLMs. And then Microsoft is going to be, Intel is going to bring out its GPU in 2025. And at least as it relates to...
Also, I believe there's it's supposed to be a 10% move, implied move for NVIDIA, which, see where that let's see if we could gauge this. Where would that put us for NVIDIA? It's still taking a while. I'll just throw in NVIDIA. So 10%, and I'm going to keep it on these charts because I'm watching. You got S&P up here. You got the Qs. Let me see. Is this still the Qs? Let's put the Qs up here. Or maybe I'll just go big screen. We'll just go big screen. Oh, no, I can't because we can't see after hours. But we can do it. We can still look at what the 10% will do either way. So 10% to the downside will take us right back to support around 600, somewhere around 600. Okay, I guarantee it gets bought up maybe after 12 days, whatever. 10% to the upside takes us to all-time highs. Can't lose there. All-time highs, people want more. Back to support, people want more. So still a bullish market. So far, the macro is not communicating any big downside because dollar is stable, rates are pretty stable. So here we are. Did I miss it? No. Oh, Lucid. Is that Lucid earnings? Let's see what Lucid did. Let me rewind a little bit. Competing with Tesla. There are rumors that Apple wants to buy Lucid Air. I don't know.
After reporting a loss in the fourth quarter of $2.09 a share. Revenue coming in lighter than expected at $157 million. The street was expecting revenue of $180 million. They end the year with $4.78 billion in liquidity. That's been a question for a number of people on Wall Street in terms of where's the liquidity? Will they have to look for more liquidity in 2024 or 2025? In terms of production this year, the guidance is for 9,000 vehicles. They produced a little over 9,000 vehicles last year. So that may be interesting for a discussion on the conference call in terms of you've stabilized, keep dropping on the production over the last year. You've stabilized at least 9,000 vehicles. Now the question becomes, what are you seeing in terms of demand, and when do you think you start to increase production? Can you increase production perhaps later in 24 going into 25? Guys, back to you.
All right, Phil, thanks. And that stopped bouncing around just fractionally higher. Meanwhile, Etsy earnings are out. Julia Borston has those numbers. Julia.
Etsy
Hey, John, Etsy's
Does anybody even use Etsy? Is it that? I remember Etsy was like $40. I'm not sure if people even really use, and I don't know anybody that uses it. Maybe they do. But yeah, Lucid, we'll see if they survive. I think it's going to be Toyota, Tesla. I don't know about Ford. Tesla still has $9 billion of cash also, and hardly any debt, versus like Ford and GM, they have like $100 billion of debt. It's insane. Come on, NVIDIA. Everybody watching this NVIDIA earnings. Either way, what do you guys think? Do you think NVIDIA goes up or down? What are the thoughts here? Do we think NVIDIA goes up or down? Does NVIDIA go up or down? I guess off earnings. Initially, you think it goes up? I mean, shoot, after that big pullback, it probably does. I mean, it's already down considerably. You got to consider the fact that it's not a big sell-off, but let's see, where are we at? We're down. It's down 10%. Maybe it just goes back to where it was. This might be a nothing burger. It just might be a nothing. We'll see. This is the last big company to report, though. The last Magnificent Seven stock or market moving. Yes, ma'am. Sure. That's what you want to hear.
Be a lot of costs, and the question will be on the call, how much is it and how long is that going to last? And we'll see what kind of improvement, because one of the things they need to do, the average buyer only buys 3 things a year on Etsy. So they've got to increase the repeat buying. They've got to increase the ticket.
Are you invested in Etsy? Is that why you want to hear? Because you're invested in Etsy or what? Need good guidance and margins. Yeah, we'll see what guidance and margins say.
To go for gifts.
All right, Barb, thank you.
In terms of vehicles to be delivered this year. Do the math there here. $2 billion cost almost of Rivian shares are under pressure, and it has to do with their guidance. But first, let's go over the results from the fourth quarter. This is a miss in terms of the bottom line, a wider than expected loss of $1.36 a share. The street was expecting a loss of $1.32 a share. Revenue coming in slightly better than expected at $1.32 billion. The street expecting $1.26 billion. Some of the numbers within the numbers in the fourth quarter: adjusted net loss of $1.09 billion. That's an improvement year over year. They lost almost $1.5 billion in the fourth quarter of 22. The 23 net loss for the entire year, they lost almost $4 billion after losing $5.2 billion in 2022. And they end the year with $9.37 billion in terms of liquidity. Now for the guidance, and this is why the stock is under some pressure here. Rivian's 2024 production guidance, 57,000 vehicles. The street is expecting 66,000 vehicles to be delivered this year. Do the math there. They only produced a little over 57,000 in 2023. Now they're saying they expected to produce 57,000 in 24. Look, they've got some lumpy cadence in terms of production and some switchovers with the plant in central Illinois, but that number is weaker than the street was expecting. Adjusted EBIT loss guidance of $2.7 billion, CapEx 1.75, and they expect a modest gross profit by the fourth quarter. Again, a miss in terms of a wider than expected loss in the fourth quarter for Rivian. Guys, back to you.
All right, Phil LeBeau, thank you. Etsy shares also falling in overtime. Let's bring in Shweta Khajuria of Evercore ISI. Shweta, it's great to have you on. Want to get your initial response to the
Boy, she could not say that name, huh? That was tough.
Guidance that calls for a fall or a decline in GMS, although it does seem like that could potentially be the trough.
Yeah, well, first of all, thanks for having me. My initial reaction is that it is negative. In our preview, we called out we were expecting a beat and investors were expecting a beat in the quarter, but really it was all eyes were on the guidance and especially the full year guide. And that came in below expectations. Now, the biggest question is the full year guide actually believable? This management team has a lot of credibility. They're very well regarded, so they likely will execute upon their guidance. But it's calling for first quarter being the lowest growth rate quarter and then improving through the year. Even if we put those numbers in based on their guide, street estimates will most likely be coming down with full year GMS at down, call it low single digit percentage, and revenue growth faster than that because they've also guided for take rates. The biggest question into the quarter was also around take rates, whether there's going to be an announcement that Etsy is raising its take rates. And so far, I have not seen it. So there will be some questions on the call about that. Also about Elliott Management's involvement now that Mark has a board seat, and also about how the level of confidence they have in their marketing spend, because they're seeing a lot of competitive dynamics with the Asian e-commerce platform. So a lot to unpack during the call.
All right. And you've given us a good packing list to know where to put it. Shweta, thank you. Shweta Kajuria. We are just minutes away from the moment the market's been waiting for. That's NVIDIA's earnings. Up next, our all-star panel is standing by to bring you instant analysis as soon as those numbers hit the tape. Don't go anywhere. Overtime's back in 2.
All right. Well, as we wait for NVIDIA, what sectors are you guys most bullish on? Or stocks, individual stocks, sectors, individual cryptos, digital assets. What are you guys most bullish on at the moment? Cybersecurity, chips. What chips are you in? SMCI. There's so many chips. See the ones that I have up here. You also have TSM, ARM. Anybody in ARM? ARM, TSM. What is this? Broadcom. Broadcom is huge. 500 billion mega cap. That's starting to tick up. Micron. BTC and BRK. Okay. I like the balance there. Bitcoin and Berkshire Hathaway. All right. So Berkshire Hathaway makes a lot of their money off. It's basically a fixed income growth asset. They have I think Berkshire Hathaway has the most cash in the entire market. They hold the most cash. It's like $125 billion in cash on their balance sheet. And then BTC has no cash. They just generate growth. TSM, CrowdStrike, AMD. Okay, those are growth drivers for sure. TSM is looking good. CrowdStrike just keeps grinding up. TSM looks good. And then AMD, that chart I think is setting up for another big run. These chips are insane. Also, there's probably going to be another announcement for the CHIPS Act, right? Because they create the money to flow into chips or infrastructure, and then they slowly start deploying it. Just like today, we deployed some for. Oh, are we here? Is it time?
CEO of More Insights and Strategy, and Gil Luria, Senior Software Analyst at D.A. Davidson. As we do await these results, Patrick, I'll go to you here first. I mean, certainly
coming out only on 18 billion, which is, at least from an overall financial standpoint.
We're waiting for NVIDIA still. Okay, NVIDIA just invested in Sound. Oh, really? Oh, that ticker. I know a couple of people were. Okay, we got a minute, 48 seconds left. SOAUN. Okay. And I know that was an AI. It's very, it looks like it's at the lows. So that should be a game changer. I know a lot of people are probably piling into that one. SOUN. User, you said at me? You're invested in me? Huh. Shoot. You know where I'm at, man. I'm not supposed to say it, but I like Chainlink,
These huge
Tesla,
orders.
Palantir, obviously Bitcoin, Ethereum. But if I had to go with cryptos in general, I'm gonna go with Chainlink. I think it's gonna be one of the big chips, blue chips. Maybe not soon, but I think it's gonna be. I think it has the most upside. It's a $10 billion market cap. Ethereum's 300 billion, so it's much, it's much smaller, but its use case is even wider than Ethereum's use case. That's arguable, but You can debate that for sure, but it's just much smaller. Super microcomputer. I wonder if anybody got puts on that SMCI. I flagged it on Twitter. I said, "Hey, SMCI is ready for puts." I didn't do it though. The puts, they were expensive. 120 something% volatility. It was insane. Okay, we're almost there. We're almost at NVIDIA earnings. We'll see how this stock moves. Let me put NVIDIA back down in the bottom. Okay, let's see. It's moving up in. Let's move this to the 1 minute chart so we can really see. All right, there we go.
Is that you're looking to low single months delivery is remarkable as well. TSMC, their main partner, has been able to expand their capacity very significantly in order to capture this demand. And again, this is one of the reasons they could have a really great 2024 is that they can actually do a better job of meeting the demand that they have.
And there goes NVIDIA. It must have had good numbers initially, or the shorts covered.
Pat, what is it that we're not going to hear, you think, today? 4 weeks from now, we do have GTC, which I think used to be called the Game Technology Conference, but now it's all about AI. And there's an analyst meeting connected to that where there's going to be an extended sit down. I will mention that those numbers are crossing the tape right now. We'll get them to you for NVIDIA's earnings as soon as we go through them. But Pat, what are we not going to get from these numbers today?
Yeah, what we're not going to get is the future, any definitive call on that. And the two things that I want to hear from GTC is A, is NVIDIA getting into the custom SoC or the custom ASIC market, which I think is a big thing. Is
Hold
all
on,
the
Pat.
CS.
Got to pause you there. We do have those numbers. Let's get to our Christina Partsinevelos with them. Christina.
So for Q4, we're seeing earnings per share of $5.16. That's a beat compared to the $4.64 the street was anticipating. Revenues also a beat, $22.1 billion. Street was anticipating $20.61 billion. And I know we were talking about data center revenue. May as well bring that up. Data center revenue for Q4 coming in at $18.4 billion, higher than the $17 billion anticipated. Similar for auto, $281 million, a little bit higher. And I'll continue to go through the results and get back to you shortly with guidance.
Christina, yeah, stick around. I mean, it looks like the outlook for the first fiscal quarter of 25 is $24 billion in revenue, which I think would be versus $22 billion expected. I mean, that's certainly a beat, right?
It is a beat, but if you think about the buy side whisper number that everybody was talking about, 23 billion, some even saying a little bit higher. So it's not a massive beat. That was the big concern going into this earnings report as to why we saw the stock drop 3 days in a row. There was concerns that the magnitude of the beat wasn't going to hold, and you had some profit taking leading up to it. Could be contributing to the 3% drop that we're seeing right now. To your point, that 24 billion, it's still strong, especially for Q1 guide, but it's not the same type of caliber that we've seen in the 2 previous quarters.
All right, Pat, want to get your reaction to the numbers that we do have so far with a beat on the top and bottom lines.
All right, look, I'm just gonna pause it. I'm not gonna take it off. If they beat all their numbers and guidance and still sell off, I'm pretty sure the correction has started. That is the correction. The market is unpositioning from bullishness for a while. We'll see, because they beat on everything. So all right, let's go.
Beats for data center revenue, beats for auto. And to John's point, it looks like better than expected, or at least stronger fiscal first quarter revenue guidance as well.
Said I expected a beat, and that's exactly what they did. And, you know, it's kind of a double-edged sword when you see availability getting better, which is, hey, I can probably get more cards to you that you need, but you lessen pricing power. So very positive on that. And I think, you know, again, the size of the auto business in the, you know, range it is in the 200 million-ish doesn't make an overall huge statement, but it is a good sign for the future of what they need to do, whether it's 2, 3, or 4 years down the road.
Gil, looking at data center specifically, it looks like the number came in at 18.4 billion for Q4 versus 17 billion expected. And of course, that's what you need if you're going to get revenue beaten by $2 billion, is you need strength in data center. What does that say about the continuing data center demand, and maybe about the other areas, including gaming as well, which you said would be a little difficult to parse out?
Right. So the fact that the number is so high and that they guided for an even higher number next quarter is a reflection of what we heard from the hyperscalers on their conference call. We heard from Amy Hood and Microsoft. We are accelerating our purchasing. We heard from Mark Zuckerberg very specific goals about the amount of GPU he needs. We heard from Amazon that they're finally getting access to supply. So that demand is still ramping through the year, and that's reflected in these numbers. I would just say Christina did a very good job reporting that the whisper number on the buy side was so much higher than the consensus number that that because they didn't quite get to that number, maybe the stock isn't showing the upside that it would ordinarily with this kind of result.
All right, we're going to go back to Christina. We're not going back to Christina. Pat, I'm going to go to you here because just looking at first quarter fiscal 2025 outlook here, in terms of margins, GAAP and non-GAAP gross margins expected to be 76.3, between 76.3 and then 77% respectively, plus or minus 50 basis points. I guess walk me through the importance of gross margins as we do look to another year for this company where the expectations have been so strong and where, interestingly, the stock is now trading up about 1%.
Yeah, so NVIDIA's had pricing power for the past 18 months, particularly on its new line. When you can't get it, you can essentially name your price. And a car that would normally go for $20,000 being sold for $40,000 and even more on the open market, it's great. On the flip side, your cost of goods sold from folks like TSMC and the folks doing the high bandwidth memory are charging more. But net, the margins look incredible, and I'm glad to see there wasn't necessarily a movement down that you might expect as supply from TSMC wafer and packaging improved. So it's impressive.
Gil, in a way, it's remarkable that the move that we've seen in NVIDIA thus far, was initially lower. Now it's fractionally higher. And of course, you got to wait for the conference call for all kinds of color. Executives will have a lot to say as the afternoon commences. But this is a stock that the options market was expecting to have a dramatic move. And so in a way, Gil, it seems like modest moves based on these strong numbers might be a win for NVIDIA.
Yes, and I would say that as we start looking towards the conference call, what we're really going to be listening for is commentary about 2025 and 2026. I'd say on the last conference call, Mr. Wong.
So look, we still got the conference call to go. I'm not doing the conference call, but if NVIDIA does not recover, it looks like it's starting to recover. If it doesn't recover after beating top line, bottom line, and guidance, the market is tapping out. Investors are tapping out saying, okay, we're selling the top. Usually you get tops around the best beats when the market is overextended. We are overextended. Sentiment is overextended. Positioning is overextended. It's not extreme, but it's still overextended to some degree. So the market is tapping out if that's the case. Look, the Fed minutes were good. The Fed minutes were very positive. So the market should be grinding up, but NVIDIA earnings are such a big telltale onto the demand of chips, which, hey, it looks like it's recovering now. We might be making new highs. We'll see how it finishes off. But either way, if it doesn't happen, I mean, as I'm speaking, it's literally bidding up, then the market's probably rolling over. If not, it looks like we're still going to be grinding and melting the shorts higher. So we'll see.
Did a good job of talking about the vision of why he sees the cycle continuing for a couple more years, as Patrick reflected. I think there may be more of a need for him to be specific. Orders coming in for 2025, maybe levels of backlog. That's what we're really going to be listening for to justify another move up from here, because the multiple is only low if you think there's positive growth in 2025 and 26. So that's where a lot of the discussion is going to migrate to, especially on the conference call.
Okay, Christina has more from this earnings report for us. Christina Parts-Nevelis.
Yes, I was just quickly going through the CFO commentary, and you guys bring up data center revenue. Data center revenue did climb 38% sequentially, so quarter over quarter. And a big portion of that data center revenue actually does come from China. Previously, the company has said about 20%. So in the CFO commentary, they did say data center sales to China declined significantly in the fourth quarter due to U.S. government licensing requirements, something that we already anticipated, but points to the strength in demand if such a strong portion of that pie was weaker, and yet they still managed to beat 38% quarter over quarter. An increase for data center revenue. So that's seen as a positive. There's no other mention of China in the entire CFO report, but I'm sure there'll be more on the call.
Interesting. Gail, I'm going to go back to you on that since I did ask you about China earlier, and the fact that they do seem to be offsetting that sales pipeline that was going to China now to other, what's the word I'm looking for, to other customers. What that tells us about the demand picture versus production, or I guess I should say versus demand versus the supply and how they keep up with it.
Well, that's right. There's more than enough demand right now, so the shortfall in China isn't as important. Longer term, the Chinese market is incredibly important, and there's a lot of dynamics at play. The fact that we are limiting chip sales to China is
Okay, so there it's now is it, did I stop that? No. Now starting to rip. It is now starting to rip, and now we have an update. Jensen Huang. Is that his name? Jensen Huang? Well, Jensen, maybe not Wong, but Jensen, they showed him a picture after earnings. He's looks like he's gonna pass Elon Musk for sure now. So we'll see how that plays out. Man, look at that. Is that even what is that? Yuan? No, I'm just kidding. That's USD. But anyways, yeah, they're crushing it. Demand is ridiculous, and looks like the market wants to keep going. So, well, and you never know by the end of the week if we do slow down. If not, we're just going to keep grinding higher until there's a real issue. Because again, that FOMC minutes were positive. Now you're looking at lower inflation for the next month. Also, in about 9 days, 8 days, I guess you could say a week, we have the Fed PCE, which discounts oil prices a lot more, right? If we're removing oil prices from inflation, it's a smaller portion. Then that means this PCE could be lower. We could be in the twos, 2.8, 2.7 inflation for the Fed's preferred inflation gauge, and the market just keeps grinding higher. A melt up continues.
right now. Later on, there's going to be a solution that's acceptable to the US and the Chinese government. Right now, we're probably getting chips into China in an indirect fashion.
Okay. Christina, Gil, and Patrick, thank you for joining us.
Thank you.
Up next, much more on NVIDIA's big report, what these numbers could mean for the mega caps and the broader tech sector in the months ahead. That's after this quick break. Overtime, we'll be right back.
Goodness sake, data revenue up. So 22 billion revenue be expected here. I'll just pull this up. This was the numbers for NVIDIA. Man, I wish I was quicker on the keys. A little clicker on the keys. 22 billion revenue beat versus 20 billion expected. 265% up year to year. What's that going to be next year? Data center revenue up 409% year over year. And goodness sake, who would have thought that? In last year, we were at what, 2023 February. So we're at the bottom of the cycle pretty much. So 400% guidance is not as strong because you can't really push out that far. 22 billion versus 20 billion in guidance. Yeah, this is insane. This is insane growth. This is all about AI, artificial intelligence. Who knows who's actually going to capitalize on AI? We know it's Microsoft. We know it's Google to some degree. We know it's Microsoft, Google, Apple's probably going to come out with somebody. But who's going to, actually create a better product? Does anybody use ChatGPT every single day or Google Bard? Or did they change Google to something else? They changed it to or Twitter, right? This is the AI wars. The AI wars, artificial intelligence wars. So it looks like the market's gonna keep chugging along here. Can't get enough of that NVIDIA. And I think there were some price targets on NVIDIA at what, 1,200? Something like 1,200, maybe over the next quarters. If this doubles again, that's insane. So here comes the calls. Now everybody's gonna be loading up for calls tomorrow. S&P is moving up again. Sheesh. Okay, we're gonna cap it there. I mean, that's it. We saw the earnings. We're gonna cap it there. Let's just do some technicals. We'll go over some tickers. We'll do some technicals. If you guys got charts you want me to look at, I got explanations, the truth. No, I'm just playing. I'll give you my opinion on the chart, support, resistance, demand, supply. And should I keep this up there? Yeah, because you can see it. I wish I could move this to a different side, but I guess I can't right now. All right, so what do we got here? I don't think TikTok is getting your external mic signal, just computer mic. Yeah, TikTok can't get my actual mic, bro. I have to. There's no way to plug in the mic to StreamYard and have it play on TikTok at the same time. So unfortunately, I can't do that. You're just gonna. Is my voice too low or what? Do I got that blue pill in my voice or what? It was already priced in. Saw the news event. QZ. All right, QZ. I wish I could. I've tried it in the past, but trust me, it doesn't. I need a professional technologist to hook up my stuff. QZ. I don't see QZ. What is QZ? QZ USD. Is this a crypto QZ? Are you sure it's QZ, user? So much better on your YouTube. Yeah. Oh yeah, it's gonna be way better on YouTube for sure. As I always say, just jump over to the YouTube. A link is in the description if you want to see the charts. They look way better on YouTube. This is, TikTok. I just have more people on TikTok, so it gets more exposure, but it's a way better experience on YouTube if you want to jump over there. QQQs. Okay, yeah, this is good. Let's look at the Qs. All right, I'm gonna bring this chart up and I'm gonna turn you guys a little bit so I can see this chart, so we could dive in here. So Qs. Where's that 50% retracement? So the Qs from this last. Okay, 50% retrace. If we do pull back, we're probably going to pull back here, 390, but something very devastating would have to happen. So far, earnings, FOMC, monetary cycle, everything is really positive. Plus, you got the CHIPS Act coming in. So I don't expect that. It looks like we're going to do well. Let's do an anchor VWAP. Okay, anchor VWAP is volume weighted average from the previous low with the volume. Basically, this is where the average support would be from given volume, right? From said volume. We're looking at there. Okay, let's bring that forward. Let's look at this one. We're still ahead. Okay, so these are levels of support. This is how I look at support. That last pullback puts us here. This is kind of where we supported, right? This is why I use the anchored VWAP, because we found support, and this last pullback where demand came in, or so it's not really support, but demand came in here. So this is where I put the anchored VWAP. Actually, let's move it a little right here, and it looks like we're bouncing there. So we're holding this January 24 level. Okay, could you have a look at Palo Alto? Yeah, we'll look at that. I'll take a look there too, just throwing your tickers. So it looks like we're going to be grinding higher. So where could we possibly, especially after that report, sheesh. Now, you never know. You could get the brakes pulling out beneath you, but for now, we'll just go with higher is higher. Higher is higher. Okay, so let's say we continue to grind. Well, we're looking at somewhere around 450 now. What was that previous high? 440. I think we're looking at 450 to go even higher, right, over the next couple days. Now let's dive in. Actually, let's see where this RSI is at. Here's the downside though, right? The RSI is weakening, so buying pressure is falling. But when you're in this kind of bullish mode, when the market is this hot, usually you just pull back to the middle of the RSI and you just grind higher. So we could be bouncing here. Now, after getting the FOMC minutes, you're layering on the macro, the Fed, you're layering on the fact that the dollar's not making new highs, rates are not making new highs, which could change tomorrow morning. But if they don't, then I think we bounce here. We go right back to an overbought RSI. So RSI has room to move to the upside unless something systemically changes. Let's go to that 30-minute chart, come down a little further. Actually, you know what? Let's look at where we at with the simple moving averages. Okay, so we're a little behind here. Now, this is a lot of clutter. Let's take this off. I believe this is the 10-week moving average. So if I'm going to use this, I'm going to go to the week. The yellow is the 10-week moving average, which suggests momentum, market momentum. As long as we hold the 10-week moving average, that is market momentum. We've held it here. Looks like we're literally coming into here. So we're still in momentum. Okay. That RSI looks like we're still at the top, but no systemic risk. Inflation's not coming back. Economy's still strong. Higher is higher. Looks like we're going to be grinding up higher. Let's go to the 30-minute chart. Take some of this off. Unemployment PMI might tap out at 432 Qs. Unemployment and PMI. PMIs look good to me. PMIs look pretty good to me. All right, so 30-minute chart we're looking at, and should I get rid of this? Let me know if I should just get rid of the sign. Is it too much in the way? You tell me, you're the user. And look, 30-minute RSI starting to pick up. So if after hours, we should be picking up on the Qs as long as the earnings call in NVIDIA doesn't tank us. Looking at Aave and Cooler as low caps. Okay, Aave and Cooler also. And then let's look at the trend. Are we breaking the trend yet? Here's the trend. Okay. You said please? I think you meant remove it. Let's remove the watermark for now. We could just remove it. This is the Qs. We're looking at the Qs. All right. So we break this trend. I mean, I don't know if we break it tomorrow, but if we get above this previous level, okay, this is the most local, closest level to us. If I can find what I'm looking for, okay, there we go. Looks like this is pretty much the level we need to clear. Turn this into resistance. Okay, so once we get above 427.40, this is our resistance zone. If we can get above this level, not right away, but if we grind higher and get above 430 on the Qs, we're going back into the bull trend. So 430, I believe, from my analysis, 430 is the level. If we come back down, we're probably going to touch this anchored VWAP. So look for 430 to the upside. For the downside would be making a new low under 420. So a lot of room to grind higher. That's a very bullish report. So we'll see how the Qs play out. All right, we got who else we got here? No. Max P said Palo Alto. Palo Alto Networks. What is Palo Alto? I know. Probably that thing got crushed, man. I'm sorry about that. I don't know what the reason, what the fundamentals were, but I think it's just falling back into the trend. Let's look at the weekly really quick. Let's see if it's holding momentum from the simple moving average. Drop momentum. It's coming back into that 50-day. Is this a 50-day? I think I have this as a 50. Not sure exactly. Well, let's take these off. Let's throw on anchored VWAP from that previous low. If it does come back down, if it continues lower, Palo Alto Networks. What's a better way to say that? Paul, I can't even say it. Boo boo. I'd say the low. You have a little bit of support here. You have some nice support around this area. Let's turn that into support. So I would say, is there any significant volume at these levels? Yeah, right here. Significant volume around 220, 222. So I'd say about 220 might be the lows for Palo Alto, 220. Look for 220. If it drops 220, then, watch the consolidation, but it's under that anchored VWAP, and it looks like it dropped the other anchored VWAP. But this could come right back up. Where's your levels of resistance if it does bounce? I mean, there's not very much resistance, to be honest with you. I'd have to look at this and say above 275, you break out. Below 260, you break down. 275, 260 is it. Just in space, just floating in space. All right, Aave. QQQs, Aaves. All right, let's go to Aave. Aave, decentralized lending. Let's go to that weekly. I don't know if crypto if you can even apply simple moving averages to crypto. Oh, it just broke out. This is actually a really good chart. It just broke out of this wedge. It is now bouncing. That's a really good chart there. Low stop under 83 at 90. That's really good. That's a tight stop for a crypto. Obviously starting to break out. Let's see what the simple moving average looks like. Let's go. Yeah, this is the weekly chart. That looks really good. Let's take the volume off. Don't want to see that. RSI is grinding higher. This looks solid. Aave looks really solid. I like that. Okay. All right. Let's go to the daily. Actually, I do like to use anchored VWAP on these. Let's go here. A little below from that previous breakout. If we drag it to the new low. Yeah, I'd say Aave. Actually, let's go to the daily. Zoom in a little more. See if there's any significant volume that we can anchor the VWAP to. Not really. Not really. Let's go to the highs. Probably needs to get above the new high. I think AVE needs to hold 100, and you're looking at between 80 and 100 pretty much. Nice little support there. You could be looking at a new trend. Could be staring at a new trend for AVE. Are these lines not thick enough? Can't tell. Take the volume back off. Don't want to get that in the way. So yeah, AVE looks solid. I mean, it is breaking this downtrend, but we'll see. Bitcoin's up a lot. That's the only thing I'm worried about is Bitcoin has a correction before it moves higher. But if that's the case, then you get AVE move right back into support. The best support would be down here. But I mean, if it does drop that low, other than that, we're looking at 76. So I'd say those are your two areas. I'd say, yeah, that's what I'm looking at for AVE. IT security software, Cooler's looking good. I like the fundamentals. I'm not expecting this to technically look really pretty at all because, I mean, it's a micro cap. You could sneeze and it goes to zero. You know, you can sneeze and it goes to zero. But they are partnering, if you believe the new YouTube video. Look at Cooler Technology. See ticker symbol KULR. Check out their YouTube channel. The CEO came on and explained why the stock is tanking. And he explains it and he says, hey, look, we got contracts with Blue Origin. We got contracts with NASA. We got contracts with the military. We got contracts with SpaceX. So that might cause you to just buy 1,000 shares, you know, very, very cheap. Not advocating for it at all, but yeah, Cooler Technologies. I mean, it's getting ripped, but this pullback right here looks good. I try to use the RSI. It doesn't work because it's a small cap. Really, this is a gamble, but you're betting down the road because it sold off so much. Look, we can go back to the month chart. Look at this RSI. This thing is straight down, right? So if that capitulation holds up and it starts to grind up a little, I mean, I don't even think you can do technicals, to be honest with you. I think you just have to believe in this. You really just got to believe in it. I believe in it, but not to where I'm going to put my whole, big chunk of my portfolio. I do like the thesis though. It's a $20 million market cap. Some of you on TikTok could buy this. No, I'm just kidding. You wouldn't be watching my stream, but it's a very small market, so it can move. It can definitely explode if that's the case. I like it. I like Cooler. Big move to the upside, came back down. Maybe it'll find some ground. At 10 cents, shoot, if Chainlink goes up a little more, I don't mind buying more. I think it's going to survive. Those are my instincts. I think it survives. It's extremely oversold. I like it. Let's see. Can you explain how to use anchored VWAP? Oh, yeah. See, anchored VWAP ain't going to work for this thing. Heck no, it's not going to work for this. Actually, let's try it right here. Let's go to the daily. Yeah, I wouldn't even try any support on this. It's just you're looking pretty far out. You're just like, hey, we're at the bottom of the cycle. The Fed should be cutting rates. That'll ease a lot of these small companies. Give them a little more, open them up to more debt. Not more debt, but open them up to more investing. People will take more risk. So it's at Anchor VWAP. We'll see. So how do I use it? There's so many ways to use it. What I'll do is here, I'll show you really quick. What I'll do for Anchor VWAP is I'll do a previous high. So if I'm looking at Tesla here, because I'm always looking at Tesla, I'll Anchor VWAP the local low. So the recent low. Let's go to the 30 minute. It's easier to see. I'll Anchor VWAP the lowest low. Right from the trend change, when the trend started to change, it was downtrending, and then the trend broke, started to uptrend. So I'll take it to the lowest low from the bottom of the range, and I'll say, okay, even if we pull back, here's the volume weighted trend, basically is anchored VWAP. This is irrelevant. We don't need that. And then I'll look at I didn't get rid of it. And then I'll look at the last pull down and I'll mark it there. So I know there's two levels of support based off of volume, not just based off the trend. I also want to draw my trends too, right? I want to know the zones. I want to know where there's zones of support. So because we know trends don't work all the time. So I'll do that. If it's an uptrend, this one's easy, right? It's easy. And then I'll go to the local top and say, okay, well, where's the resistance? Here's our high. We need to get above 196, right? 196. So you're in this area of consolidation between 195 and about 190. And that's where the pressure's at, right? This is where the pressure's at. You can see it all connecting anchor VWAP from the highs, anchor VWAP from the low. Here's your pressure. If it breaks to the downside, I am out at 189. I think it's going to go lower. If we get above 195, 196, I think the pressure moves to the upside. The balloon pops to the upside, whatever, right? So I don't know if that's a good lesson, but that's how I use it. Can we look at Chainlink? Yeah, let me see. Do we have anything on here? Link, please. Oh, we got some linkers. Okay, with the link. NVIDIA moving that QQQs. Yeah. All right, Chainlink. Let's take a look at Chainlink. I think me personally, for me, in my situation, best opportunity in the market. Nobody sees blockchain coming. Everybody thinks it's trash. They're all focused on Bitcoin and Ethereum, which are great assets. Don't get me wrong. But this is the new internet. This is interoperating. This is connecting the whole internet. Look at this big base, just a beautiful base. So here's what I got on the anchored VWAP for Chainlink. I mean, it broke out of the consolidation range, made a new little range, and now it's just holding that last range. I don't think simple moving averages are going to work that great. If we do throw them on there, we're still holding this momentum 10-week moving average, which is pretty much at the previous resistance. Right? This is the previous resistance holding. Let's see if it turns into support around 1650. I think we can go as low as, if I look at this bar, right? Then I think we can go as low as like maybe 15. Maybe 15. This is our anchored VWAP. This is our 10. The yellow is our 10-day weekly moving average. If we go to the daily, I'm going to take that off and just look at the anchored VWAPs. We are at the previous low, local low. That's probably not the right one to put, but we're at that low. I don't know if it holds. These are not as sound as stocks, but I still like to use them. And then if we go back to this low, it's about right here. So maybe we pull into about 16, 17 bucks in Chainlink. And if we get some kind of pop, and what does a pop look like? Well, a pop would be similar to, let's see, how would I describe a nice pop? If we pull into this level and we pop up, so let's say this was let's say this was our last level, okay? Here's our last support line. Because we dropped, we popped, came back down. So if you see another, some type of support here, and then it breaks the trend, starts to break the downtrend, which is really hard to tell on cryptos. It's not that simple. But if it breaks the trend, momentum picks up, right? Breaks the trend, momentum picks up. Breaks the trend, momentum picks up. So as long as it holds the bottom, breaks out, holds, breaks out, holds, breaks out, we'll see if it can hold and then break out. You're not going to get the best prices, and it is a crypto. And if you're looking long term, you want the lowest prices. This is not like trading a stock. You want it to get crushed, and you just want to buy as low as possible. Oh, Chainlink YouTube just added interview with head of city digital assets. I saw that today. I was hoping they'd mention. I was actually going to make a video on TikTok about that. I might do it. I might just edit the video. You guys want to hear it? I might edit the video. They don't mention Chainlink, so I wasn't sure, but I mean, they're using Chainlink. So now, 30-minute chart. Again, these are kind of irrelevant when it comes to the crypto. You're just looking at Bitcoin. But I would say a good level is going to be when it really started to take off here. If it can come back to 15, if it comes back to 15, to me, that's a no-brainer, back to 15. Because it might just move up very strongly. So we'll see, back to 15. I like Link, though. Definitely like Link. Upside, a lot of upside there. Especially when that narrative comes. I don't know, but that's my bet based off my experience. Are we not in a, oh no, we are. Why did it do that? Yeah, that's Link. What else we got? That's about it. What up, John? BTC fanboy? Yeah. I mean, hey, you're a fan of what makes the most money, right? You're a fan of safety. I'm a fan of making more money and losing money, I guess. Bitcoin looks good. It's at the top of the trend. I mean, I'm a little cautious. I think Bitcoin's more likely to pull back, which is why I'm saying, hey, look for Chainlink at, 17, 16, 15 possibly, because Bitcoin's overextended and that RSI is rolling over. It's now coming back. Now, can it stick and go higher? Yeah, because NVIDIA just blew out earnings. If the stock market exuberance continues to pick up, if rates roll over, if the dollar rolls over, Bitcoin can grind higher. But if not, if dollar breaks out, if yields move higher, I don't think Bitcoin can really hold this level much longer. It's at the top of the trend, so I would suggest not. If we go to suggest not, ain't nobody talk. I read that book too about being out writing clearly. I'm gonna try to be more clear. I know I talk crazy, we're all over the place, but it's just how my brain works. I'm gonna try to be more clear, concise, not use too many big words. Yeah, this RSI, it's kind of peaked out here. It's kind of peaked out. I'm thinking Bitcoin has a nice little pullback, maybe even back into this upper trend, right? And then possibly down here. But for the most part, I'm gonna say we have a nice little pullback to. Oh, this isn't Bitcoin. Let's get to the real price. Oh, look at, we already got it marked. We've been looking at this. I think if it does correct, we could come back down to 44, 45, maybe at the lowest to 42. That's our golden pocket. So that's a clear level of support. Make sure this is more accurate. Okay, our gold. Oh, we're right above the golden pocket. Okay, so the golden pocket's about 48. Okay, never mind. Is that also the 50% retracement? Let's check. What does that mean? Not much. Just more probability talk. Nah, 50% retracement would be back to 33. That'd be like the worst case scenario. That's what everybody's hoping who missed it. Then Ethereum. Let's take a look at Ethereum. Oh, yeah, I've had this marked up. Ethereum hasn't even made it to its 50% retracement. 3K. I think Ethereum has more room. I mean, at this point, it's starting to gain ground. It's starting to eat up the lag. But if we were to be a little more conservative, comes back into the trend, maybe around 20 what? 26, 2700 back into the trend. 2600. Looks good. Ooh, the graph is making some moves though. Indexing data. Look at big move, big move. Come on, graph, come back into this trend. Now it's forming a nice little crypto trend where it just starts breaking to the upside. So if the graph comes back down to 16 cents, I might grab some graph. Just hold it. Aave graph. Yeah, those look good. Gerada. All right, any more tickers? It's already been 2 hours. Goodness, say it's been 2 hours. We've been on here forever. Any more tickers? Ugh. Any more tickers you guys want to look at? I'm not doing no earnings call for NVIDIA. No? Going once, going twice. I know YouTube has a lag, so I got to be careful. YouTube has a lag on it. Palo Alto Networks. Yeah, that thing got crushed. Wait a couple days to see how it clears out. I guess that's it. Let's see if this thing got fixed finally. Did it get fixed? Nope. That's insane. How is it gonna turn it upside down? That glitch. Adobe? Okay. Adobe. See Adobe. Adobe. Here, let me pull this down for the TikTokers, ticker talkers. Adobe. Let's go to the weekly. Start on the weekly. Check out that 10-week moving average. Is it still holding momentum? Nope. Drop momentum. But it is coming back down. I think Adobe might have a little more room to fall. Maybe back to 500. Yeah, I'm going to say about 500 for Adobe. based on the RSI pointing lower and the MACD. I can see it down here. MACD is pointing lower. I think Adobe has a little room to fall, but this is always a very bullish pattern also. Usually breaks to the upside. What is this called? You know how you're like shouting? I don't know what it's called, man. I can't remember all these patterns are called. I just know what they do, what they're more likely to do. So I'm gonna say 500 at the lowest. Obviously, it can come down here, come down there, but I would look at the upper. Today was a big market event, so it could be bottoming here at 528. And if it doesn't, then look for 500, right? Under 528, 500, above 540. It's a big range. That is a pretty big range. Above 540, it could be recovering. Could be, would be, should be. Daily chart. See that day. That was a big sell off though. 660. It might be done. Could be done. RSI looks nasty though. 17%. We'll see. You know what I'm going to do is I'm going to start. I can't say that what I'm going to do. Here's what I want to do. I'm not going to say what I have a lot of things I'm doing. I'm going to start charting. I'm going to get a chart over here like SPX. And why is this a copy? I don't want this to be a copy. Let's get rid of this. I'm going to make a chart. I want to make a chart and then put all the actual big how'd you guys like this? All the market events on the chart. So when we do pull up the charts, you can see when there's another event. So it'd be like this. It'd be like, watch, let's do an example. Let's do an example. If you're interested in learning more, if not, see you later. Economic calendar. So it'd be kind of like this. And you can do this on your charts. This is an idea I was thinking of. It'd be a lot easier to see kind of what you're looking, because the markets are always looking much more forward. So if we go through the economic data, FOMC minutes, okay, we're done. And why is it this thing reset on me? It should have, I only want to see US. All right, so the next big data we have Thursday, tomorrow, too much data. Chicago initial jobless claims, S&P PMIs, manufacturing. Are those going to be that serious? I don't know. Looking for a big market moving event. Inflation rate, Japan. No, that's Japan. Dang, the market might just grind higher. There's not much other events other than PCE. Okay, let's just go to PCE then. Let's find PCE. PCE and GDP. This is going to be February 28th is going to be our GDP rate estimate. But I think even more importantly is going to be PCE. Where is it? Is it on Thursday? This is why I don't have all. Here it is. Core PC. This is going to be big. So core PC, February 20. I mean, the reason why GDP is not that serious, we can see, we get the Fed now GDP cast, which pretty much tells us week to week where GDP should be. So it's not going to be that much of a surprise versus core. All right. So core PC, this is February 29th. You can see it right there. So what I want to start doing is, okay, we got core PCE and we got consumer data, personal income, personal spending, to get a little more insight on the consumer, how they're doing. And that is February 29th. So switch over to the charts and I'm going to mark February. I'm going to go to SPX because I don't really use SPX that much for actual. Let's go to February 29th. Boom. Right. February 29th. And typically this will last a couple days. So 1, 2, we'll do like 2 days. Right. And then we'll mark it up and say, this is PCE and also consumer income, consumer spend. Right? Does that make sense? So now we know if the market bids up, it could reverse at this next event. Or if it goes down, it could be trying to reverse during this event. And it always does that. It doesn't reverse at the event all the time. It'll reverse before the event, like a couple days, and then check and say, okay, was it good? If it was good, okay, we'll keep reversing. If it's bad, we're going to keep falling. But I mean, we're in a bull market. It's more likely that we bid up and then we reverse. So let's say we go up into earnings, PC is bad, and then it rolls over, right? So this is really important. Well, I guess I can't tell you what's important, but to me, this is what's important to me, is to see where the market events are actually located on the chart, so I can kind of see where sentiment, not sentiment, but where markets might change. It is a little more technical, but it's good to just know where there could be a pivot, a macro pivot, right? We're in a macro pivot machine. The most important things for the market right now, other than earnings, is earnings is over. NVIDIA just topped off earnings, meaning we don't get earnings for another 3 months, another quarter. Now we refer back to the macro data and the Fed speak and what the Fed's going to do. So this is the Fed's favorite inflation indicator, which means this is what we're looking forward to, right? We're looking forward to this. And I guess I'm trying to make sense of this. Am I just rambling here? There's something I wanted to say. Yeah, just keep your eye on that. I guess you could just keep your eye on that. Let's see what it looks like from the 30-minute chart. Yeah, there we go. And then you can make your trend too. So if you have a trend, right? If you have a trend, let's say this is our trend. And let's say it's holding the trend, and then after this event, it breaks the trend. You kind of know, oh, the market didn't like that because we're at the event and we're breaking the trend. It's just more confluence or more divergence, more ways to understand where the market might move. I know people say just follow the money. If it was that simple to just follow the price, people would be making money. It wouldn't be that complicated. Markets are complicated. Don't let somebody tell you it's easy and it's simple. It is not simple. It is not easy because they made 2 good trades. Plus, most people are you day trading? Are you swing trading? Are you investing? Are you position trade? What are you doing? Right? So it's not that simple. It's better to have more data, the significant data. There's a lot of data that is very insignificant, like Game of Trades, who's posting bearish data every single day. Oh, 2 banks collapsed. Well, they're small banks. Nobody cares. As long as Morgan Stanley, Capital One, Wells Fargo, JP Morgan, as long as they are fine, the banking system is fine. They're just going to eat up the small banks. Anyway, that's all I got to say. Appreciate you guys staying in, watching, supporting. Please like, subscribe if you have not subscribed already. Hit the likes, help me out a little bit, and I'd appreciate it. Does it show me as a paid subscriber? Let me check. Let me check user 970. I don't know, man. I don't know if it shows you as a paid subscriber. I'm not actually sure. It doesn't tell me user 975. Oh, did you? Oh, shoot. Okay. Hey, shout out to you. Are you talking about for TikTok? I wish I could identify you better, man. Robert Pratt. Okay, let me see. Robert Pratt. I have Brian Doherty. It shows me Brian Doherty and Holla Do It. Is that one? That's not you, huh? Holly Do It. Unless you're talking about TikTok, I'm guessing. It doesn't show that, man. No. Okay, that's not you. Nah, it doesn't show that for me. If anything, I mean, shoot, I'm not tripping, man. If you don't, you don't. Just subscribe to my newsletter. Just subscribe to the newsletter. We got some new. We're gonna redo things going forward, and subscribe. Stay tuned. I appreciate you. I can't see. I wish I could have seen that. It usually shows me a star, also, Robert Pratt, so I can see who you are. But either way, I'm not too worried about it as long as you learn and get some value out of me. And you ask questions, that helps me out, man, because I want to be able to answer these questions. This is not just a one-off thing. I'm trying to educate and teach, not just, do this or do that, or here's what's happening, all this fear mongering. I don't get many views, but if you learn, then hey, you learn. And when I come out with the course on everything I understand and know, then that'll bring me more value. So it's whatever. But other than that, man, I appreciate you guys. You guys stay blessed. Okay, eat healthy. Tuna is really good. I've been eating tuna. Really good. Nutrients, a lot of minerals, a lot of vitamins, keeps your energy up. No brain fog. But stay healthy, eat well, get your sleep. If you don't, sleep will destroy you. No sleep will destroy you. Work hard, praise God, stay blessed. I already said lift weights, right? Learn something new too. Stay learning as much as you can. Keep learning all you can. I learn as much as I can. Right now I'm learning how to write better because I I suck at writing, right? So learn something new all the time, use audiobooks, whatever it is, get as much knowledge as possible in this era where there's a bunch of false information and scammers. So learn as much as you can and stay solid. Appreciate you guys again. Stay blessed. Thank you.